Hello, everybody. I'm Eric Nelson with Silicon Valley Capital Funding in Campbell, California. I'm here today with Bill Snyder from Shannon and Snyder CPAs here in San Jose, California. Bill, welcome.
Hey, thank you.
So we're going to get right down to it, and we're going to talk about commercial property tax appeals. So, Bill, what are they?
Well, a property tax appeal is a form that you file with the county. Every county has their own form in California. It's where you are basically stating that you disagree with the assessed value that they've issued about your commercial property. And you file the form, you put your own opinion of value on it, and you send it in. And most counties require a fee, $30, $40, $50, something like that, with your appeal form. But if you want to protect your rights to get a reduction, you have to file that form.
Mm-hmm. So let's talk about who would file. We've seen an awful lot of variation in values in the market in the last several years. So if I'm a business owner and a building owner, who would be the ideal candidate? Can you talk a little bit about that?
Sure. We found that the properties that are most likely to be overassessed are those that were purchased during the high point of the market, say between 1999 and 2008, before we had the meltdown. And they just haven't fully recovered today, Eric. They're suffering from declining rents and vacancies. We see excellent reduction possibilities in the office markets, the industrial, warehouse, R&D, retail. Say a retail property, you've lost your anchor tenant, maybe a grocery store or a big box store or something like that because they went out of business. That just damages the property. Those are excellent candidates for reductions, and those people really need the refunds.
Mm-hmm. What occurs to me is they may not be aware of what the possibilities are, and often a building owner may attempt to do something on their own as a do-it-yourselfer. Mm-hmm. So let's talk about that. If I'm a do-it-myselfer, good idea, bad idea, and what would differentiate you?
Well, it's you can definitely do it yourself. I've got clients. I'm just recalling this guy I picked up last year as a client. He was happy to have us do it because he was thinking about doing his own appeal, but he's been thinking about it for 4 years. Mm-hmm. He hasn't gotten around to doing it because he doesn't really know how to do it, right? So he saw my flyer in the mail and he just said, I want the CPA to do this for me. Mm-hmm. So anyway, you could do it yourself. You file the form. You're going to be largely counting on the county appraiser to come to the value, unless you can come up with your own value, of course, and you would need to support it with your income, your expenses, your comparable sales. So you need resources, and mm-hmm. you need to know how to do it. Mm-hmm. So, but we've an example. We've had clients that have hired us after they got reductions on their own. County offered them a reduction of one amount. The client didn't feel like it was enough, so they hired us. So we filed the property tax appeal. Just recently got a reduction of additional $900,000 for a property like that, which resulted in a refund of $12,900 more than they would have gotten had they not hired us.
That's impressive. Now, how would you say you differentiate then? So you're checking data, you're doing significantly more research. Would you say a little bit about the amount of work and time that you have to do to make this turn out to that kind of a result?
In this case, the reason that the county appraiser wasn't appreciating the value was because he wasn't appreciating the location of this property and the lower rents that this property actually was getting compared mm-hmm. to the market. Yeah, in that area, he was using a rental value that was fair for the area, but we were below that area. And he basically just needed to be demonstrated that mm-hmm. By showing him the rent rolls and exactly what kind of tenants were moving in and why we had vacancies. Mm-hmm. So, it just takes some experience and some ability to negotiate with people, which we've been doing for 29 years. So
now you've said before, Bill, we see that values change, of course, year to year and year over year. So would you say a little bit about your service going forward, the next 1, 5, 10 years?
Yeah, that's a good question. The property tax appeal process is an annual thing. You have to file an appeal every year. The reduction that you achieve is temporary in nature. It's just for the 1 year. So if you feel the following year's value that the assessor has placed on your property is still too high, you still need to file that property tax appeal. So Shannon and Snyder will babysit that property. We're going to make sure that every year that we're paying a fair amount, mm-hmm. right? So we're going to make sure that the assessed value is what we think it should be, based on the research that we'll do, and you won't have to think about it anymore, right? Mm-hmm. So And we only get paid, we didn't talk about fees, but we only get paid if we're successful. We charge a contingent fee based on the reduction and the savings and the refund. And if we don't get one, then you don't pay.
That's a big deal. So they know then there's no risk really, but there is potentially a high reward in working with you.
Exactly. Yeah.
Good. Well, we have much more to say, and we'll share that in our following segments as we come up. I want to thank everybody for watching today. I'm Eric Nelson with Silicon Valley Capital in Campbell. This is Bill Snyder with Shannon and Snyder in San Jose, California. Bill, if we want to use your service, how do we reach you?
Well, you can always call us, 408-241-8700, and we have a website, sscpa.com.
Great. Thanks very
Eric.
much for being here.
I appreciate it.
All right.
Thank
Bye.
you.